You got your RRSP refund. Maybe 2,000, maybe 3. Feels good, right? Like the CRA just handed you free money. Except it's not free, it's not a bonus, and if you spent it, you just made yourself poorer than if you never contributed to your RRSP at all. If you already spent this year's refund, don't feel bad. 2 out of 3 Canadians did the exact same thing. But after this video, you'll never do it again, because I'm about to show you what that refund is actually worth. Over 25 years, the difference between spending your RRSP refund and reinvesting it is over $180,000. Same salary, same contribution, one decision. That's the trap, and I'm going to show you exactly how it works. By the end of this video, you'll know the exact math, the mistake 2 out of 3 Canadians are making, and a thing I call the refund flywheel, the single most powerful wealth trick in the Canadian tax system. Let's go. I'm Jay. Welcome to the Maple Finance. Quick disclaimer, I'm a money nerd, not a financial advisor. Talk to a professional before making big moves. Cool? Cool. Here's what most people think happens. You put money in your RRSP and the government rewards you with a refund, like a gift. That's not what's happening. Your employer withheld tax from every paycheck. Your RRSP contribution lowered your taxable income. The CRA recalculated. The tax you overpaid? They give it back. That refund is not new money. It was always yours. And here's the part people forget. When you withdraw it in retirement, the CRA takes it right back. It's a boomerang. It always comes home. So the refund hits your account, $2,100, sitting right there in your checking account. And now you have a choice. This is where 67% of Canadians, according to a BMO poll, take the left path. They spend it. Vacation, new furniture, car payment. It feels earned. It's not. It's a test, and most people fail it. Look at the numbers. Only 33% save or reinvest their refund. 16% put it on their mortgage. 14% home renovations. 13% travel. The rest, just gone. That means for every 3 Canadians who get an RRSP refund, 2 of them are breaking the machine. 1 in 3. That's it. Nobody asks this question. They ask, how much should I contribute? They ask RRSP or TFSA, but nobody asks what happens to the refund. And that question, that one question, determines whether your RRSP was even worth it in the first place. Let me show you the math. 2 Canadians, same salary, $75,000. Same RRSP contribution, $7,000 a year. Same refund, $2,100. The only difference? One spends the refund. The other puts it back in. Let's run the numbers over 25 years. Year 1, the spender has $7,000 in their RRSP. The reinvestor has $9,100, the original $7 plus the $2,100 refund. Small difference, but watch what happens. Year 10, the gap is $40,000. Year 20, it's over $100,000. Year 25, the reinvestor has $653,000. The spender, $473,000. That's a $180,000 difference from the same paycheck. Let me show the math so you can check it yourself. $7,000 a year at 7% for 25 years, that's the historical average of a Canadian index fund, gives you $473,000. Now add the $2,100 refund every year, $9,100 at 7%, $615,000. And when you run the flywheel, which I'll show you in a minute, it pushes past $650. Same effort, same income. The refund made the entire difference. Let me say it again. The RRSP refund is not the reward. Reinvesting the refund is the reward. $180,000 from money you already had. That was already yours. You just chose what to do with it. $180,000. That's a down payment in most Canadian cities. That's 7 extra years of retirement income. That's your kid's entire university education. Gone, because the refund felt like a bonus. Now, I can hear some of you. Jay, I have credit card debt at 20%. Shouldn't I pay that first? Yes, absolutely. If you're carrying high interest debt, kill that before you think about the flywheel. That's math, not opinion. But if your debt is under 5%, mortgage, student loans, the flywheel wins. 7% growth versus 3% interest. The flywheel pulls ahead every single year. Quick checkpoint. If you already reinvest your RRSP refund every year, you're ahead of 67% of Canadians. Skip ahead 90 seconds. For everyone else, what I'm about to show you is the single most powerful wealth trick in the Canadian tax system, and almost nobody does it. This is what I call the refund flywheel. You contribute $7,000, you get $2,100 back. You put that $2,100 back in. Now that generates another refund, $630. You put that back in. Another refund, $189. It keeps going. Each loop is smaller, but the money never stops compounding. Your refund is generating refunds. It's a self-feeding machine. Add it all up, you started with $7,000 out of pocket. The flywheel turned it into $10,000 of invested capital. $3,000 extra dollars invested, compounding, growing that you didn't earn. You recycled it from the tax system. The CRA basically funded 30% of your retirement contribution, but only if you put the refund back in. Let me walk you through what year one actually looks like. January, you put $7,000 into your RRSP. April, you file your taxes. May, $2,100 lands in your checking account. Same day, auto transfer moves it straight to your RRSP. It starts compounding immediately. Next April, you get a $630 refund on that $2,100. You reinvest that too. The loops get smaller, but the machine never stops. Here's the rule. Write it down. The refund is not yours to spend. It belongs to the flywheel. The moment you spend it, you broke the machine. The moment you reinvest it, the machine accelerates every single year for the rest of your working life. 25 years of running the flywheel, $653,000 versus $473 if you spent every refund. Same income, same effort. $180,000 created by a machine you can set up in 15 minutes. Think of it this way. The RRSP is a vault. You get a key on the way in, that's the refund, but there's a tax lock on the exit door. When you withdraw in retirement, the CRA is waiting. The TFSA? It's a glass jar. No lid, no lock. You reach in whenever you want, tax-free. If you spent the refund, the key, you just locked your money in a taxed vault and threw away the one advantage it gave you. Now the math. Same $7,000. TFSA. No refund. After 25 years at 7%, $473,000. Tax-free. Every penny. Now the RRSP spender, same $473, but they have to pay tax when they withdraw it. In Ontario, that could shrink to $355 after tax. The TFSA wins by over $100,000. And here's the part that really hurts in retirement. Large RRSP withdrawals push your income up. Once you cross $90,000, your old age security payments start getting clawed back. The government takes a portion of your OAS for every dollar above the threshold. The TFSA? No clawback. Ever. TFSA withdrawals don't count as income. That's another reason the TFSA wins if you weren't going to reinvest. Let me be clear. I'm not saying RRSPs are bad. They're incredible. But they're only incredible if you complete the loop. If you contribute and then spend the refund, a TFSA would have been the smarter choice all along. The account doesn't matter. What you do with the refund, that's what matters. So here's your decision tree. Will you reinvest the refund? Yes? RRSP first, especially if you're earning over $58,000. No? TFSA first. And if you're buying your first home, the FHSA beats both regardless because it gives you the refund and the tax-free withdrawal. Screenshot this. Here's the fix. Takes 5 minutes. Log into your banking app, set up an automatic transfer rule. The day your refund hits your checking account, it moves straight to your RRSP. You never see it, you never touch it. You never get tempted. The flywheel runs itself. And before you contribute a single dollar next year, check your CRA My Account. Know your RRSP room. Know your TFSA room. Then pick the account that matches your refund plan, not the account your bank told you to open. And for the advanced players, there's one more move. It's called Form T1213. If you know you're going to contribute to your RRSP every year, you file this form with the CRA. They tell your employer to withhold less tax from every paycheck. Instead of waiting until April for a $2,100 refund, you get $81 extra in every single paycheck, 26 pay periods. Same money, but you get it all year long instead of in one lump sum. And you can invest it immediately, so it compounds for months before the lump sum person even files their taxes. Think about it this way. You, right now, set up one auto transfer, 15 minutes of work. Your future self in 2051 has an extra $180,000. That's not a complicated strategy. That's one redirect, one time, and it compounds for the rest of your life. Every year, same playbook. Contribute before the March deadline, file your taxes. This year, that's April 30th. Get your refund, let the auto transfer catch it. Repeat. 5 steps, 15 minutes a year, and the flywheel keeps spinning. That's it. That's the entire system. And if you watched my video on the 8 money leaks costing Canadians $10,000 a year, this is the missing piece. Leak number 1 was wrong accounts. But even the right account, the RRSP, only works if you complete the flywheel. The right account plus the flywheel. That's the full system. Here's what I want you to do right now. If you haven't filed your 2025 taxes yet, the deadline is April 30th. File them, get your refund, and before you spend a single dollar of it, set up that auto transfer. If this video saved you from spending even one refund, drop flywheel in the comments. I want to see how many of you are building the machine. And if you haven't seen the Money Leaks video, that's the one to watch next. It covers all 8 leaks and shows you how to plug every single one. Links on screen right now. Subscribe for weekly Canadian money strategies, the kind of stuff they should have taught us somewhere between Confederation and Dodgeball. I'm Jay, this is the Maple Finance. I'll see you in the next one, eh?